Hey guys, this is Randy with Right Side of the Chart. This video, what I want to do, I want to get one out to you. Plenty of time to watch it before the close. I can't recall a day in recent months where I've seen so many significant technical developments. You know, a lot of things hitting price targets that were laid out. In many cases weeks ago, reversing from there. I'm seeing big pullbacks in the risk-off assets, a rally in the stock market, and it's all very much interrelated. So I want to go over this, and the takeaway can be a couple things. Kind of gauge where the market might go from here. Trade ideas. Some of these will offer trade ideas, and I'll say this: if you're not sure what to do, because I can tell you right now, this thing can go either way from here. If you're not sure what to do, you stand aside. Like I said this morning, it certainly was not objective to short when you were coming up on support. So I'm going to start out here with the equity markets, and we'll go from there. Roll into treasuries, gold, and the precious metals. We'll just kind of keep it focused on that now, and then I'll again, as I keep talking about, as soon as I get a chance, I'll do another video with or charts. I'll give you some charts on ag commodities and other things. All right, so starting out, probably the most significant technical development today was that near test of the top of the trading. In fact, you want to split hairs, you can say it was probably a test. There was a high right there of two. Let's see if I zoom in there on SPY on that candle right there. We popped above it. I'm showing 294 and change. It's not giving me the high. 1 second. No, I'm sorry. It was giving me the high. It was 294.24, of course. And today was a low of 294.33. And again, you're talking a few pennies on a 300-point security. That's basis points, even maybe fraction of that. So there it is. That's essentially a tag of the pullback in it. As I've been saying, that is had very little doubt that's where the buyer's going to step in. I told you it's objective. It was an objective area to cover shorts today. And now, more importantly, where do we go from here? Because as I said, if I was longer term, meaning many months, year or more out, longer term bullish on this market, and believed that it had another 10, 15+% to go, then this is where I'd be stepping in as an investor. And I have very little doubt that we probably had a lot of institutional investors step in. Why? Because again, what I'm about to get to, the sell-off and the risk-off assets are 100% correlated and correspond with this reversal here today, and so there is some significance there. So that's SPY, and again, I've already covered some of these this morning. NQ, same thing. There's my 76.70 target from yesterday, with my trading plan to cover there. And now here's the thing. So first off, we bounced back to resistance, pretty significant resistance as well. And remember, small divergence, we had a much larger divergent high. So I'm going to tell you, as I always do, if I have an opinion. If I don't, I stand back. It's not the strongest, but this is my opinion now. I should take that back. That we never made that new marginal high. That was the divergent high in NQ, and it has been correcting since. It's been in a downtrend. Make no mistakes about it. A downtrend is defined as a series of lower highs and lower lows, and that's so far what you have here. There it is. So there's the breakdown, and you can see right there 77.92 is pretty big resistance. Let's roll it back a little bit and show you. In fact, we're talking about the top of the trading range in SPY, right? That's what was hit today for the first time, which I figured it would be. And look, remember, we already had several tests there. NQ has been weaker. The tech sector has been lagging behind, and the tech heavy NASDAQ 100 with it. And we entered the trading range. We hit that. That's one of the decent support levels within the trading range. You can see all the reactions, and boom. So there it is. That is certainly an objective short entry now, or a place to book profits on longs, or you just trail it up. If you happen to catch some longs today on the reversal or on the lows or anywhere in between, remember the buyers could continue to step in here. We may see that another marginal new high in the markets. I don't know. My convictions aren't super high, but I'm showing you levels that I'll watch and that might change my mind. Here's a potential downtrend line coming in right there. Three distinct reactions off the highs. And of course you can see the other levels marked there. So again, it was a matter of this divergence line really should be pulled back because we haven't made a high yet, a higher high from back here. So that was our divergence. And if you look at this, I often say this, the magnitude of a correction is typically, not always, but typically commensurate with the scope of the divergence. So in other words, we had a bigger divergent high right here. You can see, the divergence at that point to here, and that led to a pretty decent drop off that high. And we had two small divergent lows, as I showed you here recently. We'll call it little baby divergence, whatever you want to call it. Little small divergent low right here on the 60-minute chart led to a little small rally. This was stronger. There's two things, not just the scope of the divergence, the distance, but also the slope of the line. This was a steeper downtrend line right there. It's and a pretty steep uptrend line as well, maybe equal to the uptrend lines here, but a much steeper downtrend in price. So that's stronger divergence. That's another thing to factor in when trying to incorporate divergences into your trading. So, and it also has led to a little bit of a stronger rally. We'll call it about equal in par. So that's that. Let's look for what's going to happen here in the last hours of trading. Could be telling. We'll see. Are they going to continue to rally it up here? Are they going to take out that minor downtrend line, the next resistance there at 78.53? Again, each of those are check marks for the bulls, and any failure, especially with an impulsive move down, is a check mark for the bears. So we'll see. And I'll kind of be watching to see how today trades and into tomorrow if there's any follow through. All right, so those are levels to watch on NQ. QQQ, I already covered this morning. There's a trend line. I pulled that one down a little bit to capture today's lows. 186.25 as I went over. Very good support. Very solid. Right about in the middle of the trading range on QQQ. Remember, we didn't have a pure sideways trading range. We did have a distinct high in the August trading range, but we had a series of higher lows. And so that was about in the midpoint. And that was a logical target. I told you guys before that if SPY hit my pullback target of that August trading range, it would definitely take QQQ back within the range, and that's what happened. And that's why the targets were lower on that. So there it is. Now back up to resistance here. 189.40 is the top of the range, as I just showed you on NQ as well. And that's that. So if you don't trade NQ, I'd suggest following the charts if you can. If you're really into this and you're trying to actively trade, I think you're doing a disservice by not following futures. Many brokers will offer those. TD Ameritrade, their Thinkorswim platform, has futures quotes or charts, I should say. Some others I'm sure do as well. Interactive Brokers. And if you don't have any of those, then investing.com gives you free real-time futures charts. I did a video on it. You can find that on the right side of the chart YouTube page under educational, the educational playlist. All right, so getting away from QQQ and NQ, covered those levels to watch. SPY 296.61. Posted that in the trading room. There was resistance there, still is. We're slightly above it, starting to crack. Let's see if it holds. Sometimes you pop a little bit above and you'll fall back. I wouldn't call that a momentum fueled overshoot, but it wasn't strong momentum. We kind of worked our way up gradually today. Wasn't very strong. It's been a pretty impressive reversal off the lows, but look, today we're only up right now, and this can and will change by the close. We're up about 0.4 or half a percent, we'll call it, on the SPY. Want to say this too before I get too lost in these 60-minute charts. Today, although this is where the bulls should have and did step in, you got to give them that right now. For near term, as long as that level holds, that's it's hard to get too bearish. But one of the things that has happened today, or what has not happened other than a successful defense of that support, is nothing. nothing so far has changed technically on this daily chart. We still have the same divergence in place we had at this last divergent high, the extension, the negative divergence. I'm talking about these divergence lines down here. We zoom in, we recently had a bearish PPO crossover, as I highlighted, and that's still intact. You can see the lines have not crossed back up yet. So bigger picture, really nothing has happened other than a successful defense of support so far. And so if you want to be safe on shorting, you can certainly have a starter short position here in anticipation of a breakdown. Also, the fact that we've rolled off these divergent highs, maybe that was the top. But you can see on this QQQ daily chart, so far we're holding support after an intraday break. You can see, zoom in real tight. What I did is I took that December 24th uptrend line earlier today I showed you, and I moved it to the bottom of these candles here, at least that candle. We could maybe move it and touch that one close enough. And you can see, and this is why when trading a daily chart, all that matters is how you close the day, because the body of this candle, as well as current prices, we're back above it. So that's something to watch. And as you can see, I have not yet extended the lines out on QQQ, but we can. And so should the market have another couple percentage points to go from here, everything I've been saying now for the last few weeks, marginal new high. Back when we were here, I was saying 2-3%, somewhere in that area. Now we're a little lower, so if we hit that level, it's going to be a little higher from this point, obviously, because we've dropped. That's simple math. That would be, I'm just trying to measure it out for you, maybe now 5% or so, and it would look something like this. Push up, should QQQ pop, make a new high, which it's failed to do already since July highs, unlike the S&P, then it could come up here, then turn around, and then put in extend the divergence. It's not a new, it would be a new divergent high, but it'd be simply an extension of the previous divergences. Just like you had a divergent high at this point that broke down, you back tested, made a marginal new high, and then boom. Okay, so we'll see what happens. And again, let's see how the day closes. We could turn around and break this trend line today and start, selling off impulsively. Anything's possible. Probably not with everything that's happened in the treasuries and precious metals, which I'll get to here in a second. Let's start out with treasuries, because U.S. Treasury bonds are the #1 flight to safety asset, gold being close second. But gold can have its own things, and I can tell you this, that institutional investors, traders, will flock to treasuries when they're worried about the stock market. And so this goes back, and what I'm getting to here is everything today. There were so many technical developments going back to the 13th. So we're talking a couple weeks ago. I laid out here, saying TLT offered an objective long entry. In the pre-market, it was poised to gap down that point, I guess, anywhere but not below the 138. Although one could also scale down to, but not below the intersecting yellow uptrend line and gap support. So there's your gap right here. See it? Gap support. And so when you see these arrows, what this is, it would get too convoluted if I showed you. This just says, look, my confidence on the entry is not high exactly where, but I do believe, treasuries are going up here, and it's a matter of, do we, gap down here and then they turn around and then break out, or do they continue down, but you still hadn't yet broken above the downtrend line, triggering a buy signal. So they did. That was then, and you can see the target back then, again, from over 2 weeks ago, 143.51. That was where I had us going, reversing. That was then. Next one up. We did hit that line, so I gave you an update, said, look, that alternative scenario, we never broke the downtrend line. We hit the yellow trend line. That was where we're headed. And I said you were a little shy back then. That was just a couple days ago. That was the 23rd. Now let's look at today. And again, it is not coincidence. That's a big level, 143.51. That's why I did not have us going up through there without a reaction. And we look at it today. That was a 60-minute chart of TLT. And you can see almost to the button. And a little brief slight overshoot, didn't even close. That candle closed right back on it, 143.51. That's that T2 level, and a reversal. And you have a trend line too that was taken out. So this is a bearish technical development. In a vacuum, it would have been the same setup, but it coincided perfectly with the reversal in the S&P 500, and again, not by coincidence. Now, kind of where I'm going with all this. All right, so is this the end of the run in Treasuries, or is this just a correction? Because this is a smaller, minor trend line, very small divergences I just drew out there. We had burned through the divergence there, but we had a big divergent high right there, and that led to that correction. And then we found support on an uptrend line. So if you look at it this way, Treasuries, have been and they'll stay in an uptrend as long as they remain above that uptrend line, and then the next, obviously, a breakout above that high would give us a new high. So if today proves to just be buyers stepping in where they should have bought at that backfill of that gap, or the top of the test of the top of the August gap, and but then the buyers fizzle out, and because the stock market is simply, any security is all about supply and demand. It's really that simple. If you strip everything else away, if you have any more buyers on a given day for any security, including the stock market, more buyers than sellers, prices are going to rise. If you have more sellers than buyers, prices will go down. And so we'll see what happens. Right now, there is a sell signal. There was a breakdown trigger today. So I can tell you a long in Treasuries would be aggressive, but it would be, it's comparable to shorting the market here in anticipation that this reversal may be faded. Too early, we don't have the evidence. I'd prefer to sit back right now and watch, but I wanted to show you that. Now, where do Treasuries go? If you're looking to buy, well, we bought them last time on the trend line. You can do that again for sure. That correction, we could fall down there. And let's take a look at the long-term chart. Here's TLT. I have a lot of different variations of this chart. There was a big divergent high. This was one of the strongest rallies in decades in Treasury bonds. Buying climax. The writing was all on the wall. I talked about them being good shorts back here, for especially hedges against index shorts, and they did. We had the correction, and we fell right down to there, that 136.54 big gap support, bounced right off it. Let me take away this bear flag thing because that's really not in play anymore. And then you can see where we bounced up to. Again, that's that same, roughly that same area I was targeting on the 60-minute chart. So where do Treasuries go from here? Well, I'm seeing a couple things. I'm seeing the PPO attempting to turn back up at the zero line. I talk about this as a trend indicator all the time. When a security is above, when the PPO signal line, the white line, the 9 EMA, the last of the two to cross, when it's above the zero line, the trend is bullish. And once you cross above, right here, for example, you were in a downtrend, right, on TLT. It was choppy sideways, and I do say that as well. I tell you guys, when you have a security that's in a sideways trading range, stay away from trend indicators, moving average pairs, things like that. You tend to get whipsaw signals. It's when you get a clear trend, whether it's bullish or bearish, that's when this one works well. And so it gave you a buy signal here, and it's told you to stay long. And what it did is it gave you several buying ops on pullbacks, and because as I said, pullbacks to the zero line, often that level acts as support for the PPO, and so you had the two good buying ops right there, and maybe this is a third. Or, well, yeah, we're there now, so we'll see. Oh, and I missed one right there. So there it is. So let's watch. And now, should Treasuries keep correcting and come back, here's a larger, more significant uptrend line. That might flip this trend indicator bearish. So again, lots happening today, and to be safe, step back, see where these things go. See if they turn around and they buy up Treasuries, the breakdown. See if they sell off the rally that we've had off the lows today. Again, the market's not up very strong right now, but it's been trending higher all day. So looks like we're going to close green unless we get a reversal into the close. And that's so we watch what happens over the next few days. Okay, Treasury bond futures. I'm going to start out here with ZN. I'm kind of flip-flopping. TLT that I just showed you, that holds the long bond, the 30-year bond. ZN holds a 10-year. These are futures for the 10-year Treasury bond. And these things trade very well to the technicals, and they give you kind of insight to the stock market. What I watch for is when, Treasury bonds are rallying along with the stock market rallying. That's usually a red flag telling you that institutions are worried. It's just anticipating a correction or weakness, and then you get corrections. But again, you can trade these just on their own technicals as well. There was a trend line, divergent high. Well, you can see all the divergent highs. I have 1, 2 on this chart. I have one divergent low right there, and that was a long, we talked about it here. We had a downtrend line breakout, secondary downtrend line, and I said on ZN you can buy pullbacks to this trend line. Now this trend line is getting long in the tooth. We've come all the way back to it today after failing right at resistance there. You can see some resistance there, more so a resistance in ZB. I'll get to ZB in a second, the 30-year Treasury bond futures. But I just want to say that right now the 10-year is just clinging to support. It hasn't yet broken down. You know, you can see it slightly under this trend line, but I could also grab that trend line and move it a hair lower, come in and capture all these reaction lows. So let's give that one the benefit of the doubt, and I can also add a let me drag this support line down right there and capture these recent lows, that recent high, and almost that one there. So ZN's hanging on by the skin of its teeth. ZB, I already pointed this out today. This one, again, and it's not coincidence. These are the futures for the long bond. It's just like TLT. So I showed you just as TLT hit that resistance level, or I was expecting a reversal, ZB did as well. My big regret for the day is I just targeted a pullback to this trend line, and we've broken that trend line, so there may be more downside. I should have just, sometimes I'll do that, is just set a stop once my target's hit a little bit above and let it run. In a way I risk giving back a little bit of profit if it reverses, but opens the door for a bigger move. So I'm watching this. Will this be the real deal, or just a a technical reversal off resistance, overbought conditions? We did have a divergent high. I've just dragged that trend line down a little lower, but we're still below it there. So ZB is in a precarious technical posture right now, breaking down. What I did is I just moved a line down there where I see some pretty decent support. I think there should be a level there. So let's just give that let's give it the benefit of the doubt. And I'm circling these reactions right here. And so again, if ZB does reverse, that would be a big fake out, meaning a bear trap. Probably a lot of people probably shorted the breakdown here. You know, to me, the better short entry was up there, a bounce into resistance while you're overbought. But there could be more downside. And again, I know I'm saying could be this, could be that. Therefore, I'm going to go in light into the close today with my trading account positions. Okay, gold. I'm going to start out here with futures. I'll get to GLD in a second. I know some of you guys trade the ETFs as well. Alright, had alternative trend lines, but this is a secondary. This is our probably the most important benefit of the doubt trend line here. You come in off the lows back in May. It looks like May. And you can see reactions there, several reactions there, one there, several reactions here lately. Big red candle today, a lot of selling in gold. Again, technically induced. We were poised to make a bullish crossover. This is something to note, and that's a rejection. That's pretty bearish when you get that. Sometimes the lines, usually you see clean separation like this, lines come up, you make a bullish cross, and then you have a bullish trend that follows. However, we are still above, at least on this 60-minute, or no, this is a daily chart of gold futures. We're above the zero line. It's right there. And you can see we've crossed above it here. So gold has been on a buy signal by that one indicator all the way since back here, really beginning of the rally. And you can see from this point to this point, that white line, the signal line, was below. So it's done a great job. That was a downtrend. I told you it was a downtrend. This was all an uptrend here. So this trend indicator has been nearly flawless going back. This is 1 year, by the way, on gold futures. The trend indicator is still bullish. Despite the rejection, right now that trend indicator is still bullish. So where I'm going with this is, if you've been itching to get into gold, if you missed a big run, or you were in it and you took profits, or whatever reason, gold's hanging on by the skin of its teeth, but it could hold up here. And as I said, I believe it's still in a longer-term bull market. Might have more to go in this correction, but if it can hold support here, then we could pop the highs and then have the next leg up. So this may be an objective entry for a swing position if you're willing to give it a little bit of room on the stops. Let's look at the 60-minute chart of GC. Again, this one, like I said, so many related securities, related in the fact that gold has nothing to do with the stock market other than it's a risk-off asset. People have been flocking to it lately when they're worried about the stock market. Very, very, very good level. Reaction there, big gap right here. Reactions from above and below, above, and then that's where we hit today. So that was, I think, an objective short entry there. and you had also negative divergence confirming that. So this move was technically induced, and it all, like I said, it was all coincided with the market hitting support. It happened fast, but so far that's a heck of a correction. So if you liked gold here, you got to love it right here, right now. Now, that being said, you know, there's some support lines in here. This is a big one. I don't know if we come all the way back down to 1492. If we do, it's been offered objective entries for months now, objective long entries. You can certainly try it again if and when it gets there. I'd like to see how the charts look at the time, and it may not get there. We've already had several tests. So again, it all depends, I think, what the market does. If this rally today gets faded, and especially if we undercut yesterday or today's earlier lows by quite a bit. Remember, we can come for another test at 294 on SPY, and that'll still just be another back test to the top of the range because we reversed a hair shy today. But that's what I'm watching right now. I don't see any buy signals or reasons to step in, but it is very oversold. That's the other thing. You know, if gold is in a bull market and you're oversold here on the 60-minute chart, that's usually time when you want to step in and buy. It's served you well in the past, so food for thought. But we don't have any divergence or anything setting up here right now to give me the confidence to add this on as an official swing trade right now. Just something I'm watching. And I'll just run through the rest quickly because gold, they all follow gold. You know, this is silver, 1788 support. It's fallen back to broke the trend line the other day. Big move down in silver, and it's at support now, but you can see there's additional support levels. No buy signals at this point in time. Platinum PL, it's undercut that to 929, or we'll call it 930 support. Had a lot of long entries there recently, a lot of objective longs, and a little false breakdown there. And remember, we broke out of this bullish falling wedge recently, ran up, and then hit this confluence of resistance there. You have several resistance lines all on that level, and so far it's rolled over, but it's back to it's right to where it was here at this low on this fake out. So again, an aggressive trade. You could step in here with a stop somewhat above, certainly keep the stop not too far below 912. If you want to take a shot here, you could even use even a tighter stop, and you might get a fade if the market fades the rally into the close, or it could go up and the buyers could step in and buy the metals. A lot of people have been wanting in these precious metals. This is one of the biggest drops in a while. So again, no screaming buy signal, really no buy signals at all. In fact, nothing but sell signals today, to be honest with you. But again, you could take a shot for active trading. It doesn't take much. One contract, a PL. If it pops up here, you're probably talking a couple grand in your pocket. If it shot back up to 293 or so, or 943, I should say that is. But again, I would also keep an eye on the stock market, treasury bonds, everything else if you're going to trade the metals. Palladium, yeah, this one just keeps wedging higher with divergences. For now, it's been the strongest of all the metals, not far off its highs, 2019 highs. And you can see I have a series of wedges here. It just breaks one, goes down, forms a secondary trend line. Right now it's on this trend line off the lows, you can see right there. So it is at support, but divergence, this one could have a much bigger correction. Of all of them, if the metals break here, and this isn't just a temporary blip with another leg up coming in the metal soon, this one still has, I think, the least favorable outlook. I think gold, silver, and even platinum, which is very closely related to palladium as far as industrial uses and actual the metal itself. But for some reason, this one's been holding up stronger. Okay, now just get to the ETFs, since I know a lot of you guys, guys and gals, don't trade the futures. I like to use those charts to just have a lot more levels since they're trading around the clock. But here's gold, GLD, divergent high right there, just like you had a divergent high here. It was pointed out at the time, little wedge there, broke down, and then we came into this secondary, more significant uptrend line. Where I place it, we can play around with it a little bit, but I think we're pretty much, we've been flirting with it. In today's candle, we're down below it again. You also have, I showed you there was a 1492 support on GC gold futures. You can see this is a similar level here. You have just a cluster of these, the recent trading range in gold, GLD, and it needs to hold above that. So ideally, GLD needs to hold above 139 a quarter, call it 139 to be safe. Otherwise, I don't see much stopping it if it breaks that level until at least this level here, 136.58, possibly more. Remember, we had that divergent high, but this trend indicator is still, it's bullish and has been since this point. Was bullish from here to here. That's where the white line crossed. Got you in most of that trend, kept you in. It was bearish here, said stay out. So that's one thing to consider right there. And again, more importantly, you can get lost in these 60-minute charts, daily charts. Don't forget the bigger picture. And this is gold on the weekly. Broke out, back tested, and whether we pull back more or not, I still think at minimum in the coming months we're coming up here at about that 150, 118 level. Let's look at the other metals real quick while we're here on the weekly chart. SLV, same story, powerful breakout of this downtrend line, divergent low, early stage bull market bottoming action in my opinion. Still, the silver still needs to take out that 2017 high right there, 2016 high. Hasn't done that yet. Let's see, next one up would be platinum PPLT, and you can see this is a chart to me, and again, this is why I do these videos. Near-term picture is a little obscure, even more bearish when you look at the breakdowns today, but bigger picture, if you are a long-term trader, trend trader, or even actively swing trading, keep in mind that this is a bullish chart. We had a big bullish falling wedge pattern on this 10-year weekly chart that has only just recently broken out. And it wasn't just, okay, maybe I'm forcing that pattern. No, it was a well-defined trend line and a very impulsive weekly candle to confirm the breakout. And on top of that, one of my favorites is not just a trend line breakout, but you took out two very significant resistance levels, a downtrend line and that 84.80 resistance level right here. It was support at that point. We broke it, set up this bottoming pattern here, and then we broke out above it. And so, look, we may come back test. Heck, we could back test this trend line all the way down here, and that could take weeks, even months, and it would still be a bullish chart to me unless we fell back below that trend line. So the point is that this appears to be very early in the breakout, and my minimum initial target, I mean the next target to the upside is 97.82 in platinum. PPLT is ETF I'm covering. That's about 12%. Then up here, that next target's about 30%. So near term, let's just watch it. And again, if you start to see these breakdowns reversed, all these levels that were broken, stock market starts to turn back down. I think the breakdowns today in the metals could prove to be bear traps, and you could see a quick reversal to the other side. Otherwise, if the stock market just continues to build on these gains over the next week or two or three, these breakdowns are probably the real deal in the metals and treasury bonds and all that, and there's probably a little more downside. Palladium, as I told you, completely disconnected from platinum and the other metals. This is a 10-year weekly chart, and this thing's at all-time highs. Crazy, very strong. But again, so I think again, to me, the risk reward is not good. Just because it's at all-time highs or has a big run wouldn't necessarily make me bearish on it. It's the fact it's at this all-time high and it has these clear negative divergences that I showed you all the way from the 60-minute chart that I just showed you out here to the weekly chart. So it tells me that there's probably a mean reversion coming between platinum and palladium, if nothing else. So we could look at a paired trade being short PALL and long PPLT. Was one thing, one potential option, but you still have this uptrend line, so you don't really have a sell signal other than that 60-minute chart breakdown that I showed you today. That's PALL, palladium ETN or ETF. There's your divergent high on the daily chart, like I told you. We had PPLT I didn't show you the daily chart. Consolidation, there's the breakout, consolidating right now. Support right here about 86.54 if you're looking for support levels. And if that goes, $83 on PPLT, platinum. And then silver, I didn't show you that, I covered gold. There's silver. And yeah, support's not very well defined on silver, at least not on this daily chart. We had this trend line that was broken, back tested. I could probably give a secondary trend line right here. Let's do that right now and keep an eye on this one. All right, and that's about it. I'm not gleaning a lot of clues from the indicators right now. The only thing that stands out is what looks to be a potential blow off top, at least near term blow off top, with this huge volume surge with a near parabolic run. That is what we call a buying climax, and we're still, those that bought into it at that point are still paying for it, and you just can't continue up once you get some type of parabolic run like that, and the buying climax, and then the sell signal, of course, with the reversal afterwards. All right, let's wrap it up here. Long video, but again, as these are all interrelated and have been, there's been that risk on, risk off trade thing going on right now today. Since the lows today is risk on, meaning stocks are rallying and precious metals and treasury bonds are selling off. So watch these levels, and you can either continue on that trade. It may continue on. That means long, short, long equities, short metals and bonds, or be on the lookout for a reversal, which of course you take it the other way around. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.